So in today's video, I'm about to break down this trade setup that I caught today. I took this trade live in my Discord, right, with my live trading students. And I also sent this trade out in my signals chat, which if you want to be a part of either one of those, the link going to be in the description down below. But I'm going to show you how he was able to catch a near high of day trade on NQ on flawless execution. I'm going to give you every single detail of why I took this trade setup and you know, what I was looking for when I was determining my bias for the day. So y'all know I'm usually only looking for trades in between the 10 o'clock to 11 o'clock hour, right? Every day I look for trades at the same exact time, right? If y'all can start programming yourself to only look at trades during a specific time window, your executions and stuff would be just 10 times better, right? All right, so let's get into the first thing that I hopped on the chart and was looking for, right? The first thing you always want to do is look at your Asia session and see what the market was doing during the Asia session, right? You can see during Asia, the market basically was trending up, right? The whole Asia session for the most part. We go over into London session and what do we have? Consolidation, right? What does that tell you? That most likely the New York session is going to be either a reversal or some type of continuation, right? So now we building little things on our bias, right? So we got these London highs up here, as you can see. The market ends up running these highs around 9:30. They run the London high, right? They also run up into, what do we have here? This 1 hour inversion fair value gap, right? Now y'all probably wondering, okay, why do you put this on the chart? The reason we put this on the chart is because, for one, it's a fair value gap here on the hourly between these two candles here, right? Now, it's also a volume imbalance right here. So we have to include that into the gap. That's the whole gap, including the volume imbalance. So we got that as another, you know, confluence for us to use for determining today's bias. So then the next thing that I went and did was I waited a little bit, right, until we got over into the 10 o'clock hour. And once we get over into that 10 o'clock hour, you can see the market had ran these highs up here into that 1 hour fair value gap. Look at how the body's closing on that 1 hour inversion gap, right? The orange gap is always an inversion anytime you're looking at it on my chart. So this 1 hour inversion gap was getting respected right here. Look at those bodies. Failed to go against the go above the 50% of this fair value gap, right? Right here, and even right here. So then right before the 10 o'clock hour starts, we get a manipulation above these highs. But the market immediately comes right back below that gap at 10 o'clock. They then create what? A volume imbalance here. So now that we got this volume imbalance, and I'm looking at the chart trying to see if I can see an entry around this time, I'm looking at that volume imbalance like that's something that I really want to pay attention to, right? If we can reach back up into that volume imbalance and the rest of the confluences, you know, line up, I want to take that trade immediately. So what was the next thing that I seen, you know, when I was on the charts this morning? So after they created this volume imbalance, the market broke down. We created another fair value gap right here. What is this fair value gap? This is the 10 a.m. first presented gap. So it's the first fair value gap on the 1 minute chart that forms after 10 a.m., right? Sometimes it might form at 10:02, 10:03, 10:04. It formed at exactly 10 o'clock today, right? So that little space between this candle's low right here and this candle's high, that's your fair value gap, right? But what do we also have? A volume imbalance. You see that separation between this candle and this candle on the opening? That's called a volume imbalance. So what this is right here is the same thing that this is, this little space in between these candles. But anytime you have a fair value gap that's inside of those three candles as well, you have to include that volume imbalance as part of the gap. So for my entry for this trade, I was looking to see if they will reach up into that volume imbalance and close below what? The 50% of that 10 a.m. first presented gap, which, as you can see, we push up into it, right? When we push up into it here, body close out of it. We push up into it here, touch the volume imbalance. The body closes below the 50%. This next candle opens up. We trade out of it, right? They trade up into it one more time. The bodies can't close even inside the gap, and then we just dump, right? So we took this trade as soon as we seen the market close below the 50% on this 10 a.m. first presented gap. So boom, the trade got put in here. I'll take profit. Now I'm gonna go over why we have a certain TP. So looking at the take profit, right? Y'all probably wondering, okay, Why is you looking at this as your take profit? For one, we got equal lows toward the downside here, right? I'm expecting for this to be the higher day. This is how you catch the higher day. I'm expecting for this to be the higher day. Where is my target though? You have a couple of different targets that you could actually look for. The first target is going to be, whatever low is closest to you. So if you just want quick moves and you don't want to be doing too much, this is a 1 to 3 almost right here. This is good enough trade, right? Also, you can take profit here, right? At this low. But why did I decide to take profit where I took profit at, which is right here? If you come over here and you look at this candlestick right here, what is this? This is the Wednesday first presented fair value gap, right? That forms after 9:30. So this is the 9:30, that 9:30 opening. Whatever fair value gap forms first after 9:30, you want to mark that off on your chart as well. And I got that highlighted in green here, right? My first presented gaps are always going to be green. So we got that on the chart, boom. That's my target. Why? Because we never hit the 50% of that first presented gap. They came down into it after they expanded up at 9:30 and came back down. They touched it here, failed to close inside of it, and then the market just rallied up to touch and do what they wanted to do up here, right? But us knowing that the market is most likely going to be bearish, we can trade to the 50% of this fair value gap. Your second target could be these lows, right? These equal lows. It's easy. Every time you're trying to look for direction, you could always look to target some type of fair value gap, right? Or some type of relative equal lows or relative equal highs. It's simple, right? So looking at that, I'm expecting for the market to continue to trade, possibly below these equal lows and maybe to the previous day low or toward it. But looking at it right now, you can see that we still continuing to go in that direction. But I don't really want to get into too much of this because I just wanted to break down the setup that we caught this morning. So hopefully y'all was able to see why I did what I did. And let's say, for instance, if you ever get on the chart and you in a trade and you wondering, how's it going to continue? Do you know if the trade is going to continue or not once you in it? As you can see, we broke down below what? This inversion gap here. So once we traded below this inversion gap, mind you, they already used it as a bullish gap at one point. The market traded right below it, right? The market traded back below that gap. Why do they not need to return to this gap right now during this run? Because they already played around in it for the most part. That gap has been filled multiple times, right? Traded through multiple times. So now we're looking at other little things. So you have this bullish candle right here after this run on liquidity, right? After they run this low, the first bullish candle you see, that's going to be your order block, right? So I marked that off on my chart with a Fibonacci from the open to the close, right? I didn't put the wick in because the real volume is in the actual body. So I put the fib on, the body, right? And I basically wanted to see them still continue to stay on the lower half of this inversion gap, but respect this as an order block, right? Which the market did, as you can see here. It traded up to around the 50%, right? But it failed to stay on that upper half of that candle. It's cool that it can trade up as long as the body's not closing higher than the body on this candle. You're straight. The wicks can do the damage. So the market then breaks down again, and you probably wondering, okay, cool, it's close to my take profit. Our take profit was on this white line. It's close. You see the market break down again, and then you get another bullish candle that look like it might try to inverse this gap. How do you know what to do? You wait. The candle does what? Immediately closes out of the gap. It doesn't even put a body inside of it. What does that tell you? The market's still bearish. We most likely going to go and hit our target, which we did right here. Flawless trade. It even pushed down and touched Tuesday's open as well, filling that entire fair value gap here. And as you can see, we continue to make our way down to where these equal lows. So the market is going to do pullbacks, and while we on the call, I'm gonna just go ahead and give y'all a little bit of sauce. If you ever see the market, right, do anything like this, and you know that's the higher day, the market push down and then come back a little bit, all you got to do is draw a fib from the high to the low, and you want to put the 0.705 on your chart, right? This is going to be that sweet area that you can reposition yourself into that trade and catch a move toward the to finish it off. So hopefully y'all learned something in today's video. I didn't want to make this too long, but I did want to get across a couple topics. And let y'all know, you know, what we do. Like I said, if y'all want to take these trades that I'm taking, y'all don't have to do none of the work. You just got to show up. I got a live trading program I run, and I got the signal chat I run. I send y'all the signal as soon as we get in. The live trading students, they on the call with me in the Discord, actually able to, you know, place the trades exactly when I place them, because they seeing everything breaking down, you know, etc. I'm gonna see y'all in my next video.